Hello and welcome to another update video. We talk here about oil, and yeah, oil is doing what it's supposed to be doing. So we're going to take a look at that. We hit my first target, so we're going to zoom in a minute. And let's take a look and zoom out a little bit. Let's take a look here at the chart from since the April 2020 low. Just for everybody who's new on the channel. And it's in 5 waves to the upside here to form a higher degree wave 1. And then we've got here in the wave 2 a WXY structure. That means it's a complex correction. That is just due to the subwaves here. I mean, I have a chance to count this as an ABC itself, but the move down for me is not impulsive enough. So I'm currently opting against a C wave. So this could just be an A wave, a B wave, and a C. Also, the C wave would be very long. The other possibility is to just have ABC, but then I have the problem in here that I have to work with a lot of overlapping waves, and I get too many 1-2 setups. So I just sort of chose the WXY structure, for me the most likely one. There are different ways of how this can be interpreted, but all of them are currently pointing for towards further downside. Yeah, it is technically now possible that oil has completed its correction. Bear in mind, we talked about the current oil price and also about $70 and so on already back in February, March. So I formulated this support area here, and we've come into this area. So technically, yeah, we've reached the area that's based between or located between the 50% Fibonacci retracement level and the 78.6% Fib level. So between $77 and 42. Anywhere in there, I said many months ago, nearly a year ago, that the correction could finish. So I'm currently looking here at one key support level. There's basically 2 support levels where I think the correction could be over with a high likelihood. It depends on how I count here the subwave structures. So if I work with the current count WXY, then I think we are leaning towards probably the lower end here, sort of 42, let's call it $42 to $50. Yeah. If I'm looking at an ABC structure, then it might end a little bit higher and we might look at the $62, $63 level. But it's anywhere in here. So I will be able to specify that a bit further as we get deeper into the support area. Currently, I have no reason to believe or assume that the correction is over. And that just has to do with the subwaves. As you can see here, if I'm just looking, I take the fibs out. If I just look at this structure to the downside, this Y wave, and I look at the subwaves, ABC, then I'm looking at the C wave currently. And in the C wave, we've got a 5-wave structure. And this 5-wave structure, we had 5 waves down already. I mean, technically you could say, okay, is the C wave already done? Do we go up from here? But the C wave is very short, so it's not likely. So, and also the move up currently looks corrective. So it works out quite nicely at the moment. So we moved down in 5 waves. So I'm assuming this is only the first wave of the C wave. We're now moving up in a wave 2. That worked out perfectly, textbook-like, as expected. We touched my resistance area. I only talked about that a couple of days ago in the last oil video. Talked about the $86 to basically $86 to $87 level as resistance range and the first target for this move to the upside. And we've reached that. So let's just remind ourselves where that target was and why it was there. Yeah, okay, that is why it was there, because it is the 1.618 Fibonacci extension of the A wave. Let me just double check that. Is that really the case? Something's wrong here, isn't it? Let me just double check that. A. Yeah, no, it looks more like the 1-to-1 ratio, exactly. I don't know what was wrong here. But again, it's the first target, the 1-to-1 ratio, the proportionality target. That waves A and C have the same length. By the way, where has the wave C disappeared to? Here. So at the moment, and we see an initial reaction. So it could very well be this wave 2 is now in and we're heading down. We don't really have confirmation yet. I think we will only, I mean, we'll get good, or the first indication is that we get a substantial break below the A wave. So below $83. So we haven't done that yet. We had a wick below it, but that's not enough. So it would be first indication. Next indication would be a move below $81.30, and then below the B wave would be probably the best confirmation we can get at $78.30. At the latest there, I would assume that a high in the wave 2 has been in here. We'll already get a good indication as well if we see a first small impulse down and a corrective wave up. 1, 2. Yeah, because the third wave down will work in 5 waves. So what we're looking for is something like that. 1, 2, 3, 4, 5. So the first 1, 2 setup. The first 1, 2 setup will also be a short opportunity. Now, no financial advice, but that's how you normally short Elliott waves. You wait for the first 5 waves down to be done, and then you wait for the correction, the wave 2, and when that's complete, you can short. Because then you know at least that the move down has started. Yeah, because at the moment, if you short now, you still risk that you're shorting into a short-term uptrend. So yeah, first target reached. I mean, this could still go all the way up to the, let's say, the $91 range to the next resistance area. But at the moment, unless we now go above $86.20, we can assume the high is in the wave 2. And we'd be moving down now in the third wave, where we could look at, target is a bit difficult because this C wave appears to become an ending diagonal. So I gave you some targets here before. So sort of the 61.8% fib level might really be a good target then for that third wave. Bear in mind, if this is an ending diagonal, because it's in a channel, those waves often don't adhere to very well. They don't adhere very well to the fib levels, Fibonacci extensions, and so on. Yeah, channel lines, trend lines are more relevant, and Fibonacci retracements of the larger scale. So yeah, at the moment it's all looking good. I don't think this low is in yet. I know there's some fundamentals going on at the moment that would eventually probably lead to a strong price increase in oil per USD per barrel. And I mean, I'm very bullish long term on oil, because if we zoom out, the idea of this structure is that we're currently in a wave 2 correction, however, of a larger uptrend. And if we measure that as per Fibonacci extensions and rules, and we assume, yeah, okay, maybe we come down, let's say just to $55 in this wave 2, then the target for the third wave to the upside would actually take us in the 1.618 extension to around $250 as a minimum. Now, how long that takes, I can't tell you. I mean, the wave 1 moved up from April 2020 to March 2022, so roughly 2 years. Now, saying that a wave 3 is oftentimes a much more bullish and much faster wave. So maybe it happens in 1 year, but it's really, really hard to say how long something takes, especially as the wave 2 correction hasn't even been completed. Price levels, yeah, they are what Elliott waves allow us to forecast with good accuracy. Time is difficult. There's some research going on. There's some articles, there's some opinions, how Elliott waves can be used for that. But in my opinion, it's too unreliable to use it. Okay, and that's my update about oil. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then also check out the channel membership. You can, if you like to support the channel, become an MTO supporter. You can do that below the video. There's a join link. It's at the moment purely for support. But if you as an MTO supporter, in the community section, and after you've joined, if you raise some questions or if you have certain wishes for certain assets to be looked at, I will try to follow that. Thanks a lot for watching. Bye-bye.